Hello, everybody. Thanks for joining us. I'm Damian Glendinning from Complex Countries, and I'm pleased to welcome today Simon Jones, who's also on the advisory board of Complex Countries. Simon and I go back a long way. He's one of the industry's leading experts on payments and payment systems. He used to be with JP Morgan in Singapore, where he was one of their leading cash management and payment systems advisors. We never worked together because I worked with a different bank. But he came back to the UK, worked with JP Morgan in the UK, and then left. And since then, he's done a series of interesting things. And I'll leave Simon to say what those are.
Thank you, Damian, and great to be on with you. Yes, after my time at JP Morgan, I then joined the fintech industry, and I joined a new clearing bank in the UK called Clearbank, where I was chief commercial officer. Fascinating time building up the business pretty much from scratch and creating a profitable wholesale bank in the UK. So you won't have heard of it because it only provides services to other regulated industry participants. After my time at Clearbank, I continue to enjoy doing the advisory part, and I am now a senior advisor for a big management consultancy firm, and I help other transaction banks, some corporates and fintechs in their payment strategy in the market. Great to be here, Damian.
Thank you, Simon, and great to be talking to you as always. So treasurers are under a lot of pressure to get involved in crypto, digital payments, and so on. We had a call recently where the big feedback was, I'd love to know more, but I don't really know very much. And so following that, I wrote a piece, which I'm sure everybody's read, but certainly one of the few people who has read it is Simon, who said, interesting, but there's lots of things you've got wrong. So we thought, okay, let's do a session together and let's go through all this, the little bit I got right and the lots of stuff I got wrong. So this is really everything you wanted to know about crypto, digital payments, and so on, but we're afraid to ask. And before we get into that, I thought it would be a good idea to go through a little bit of definition because there's lots of words being bandied around. And before we get into the definition, what became clear when we're talking to treasurers, and Simon, I'd appreciate your view on this, is we understand this is big and it's coming, but there's nothing much out there we can really do. So why should I care until it's a real problem?
Yeah.
So why should treasurers care?
Great. It's a great question and absolutely a great point. And I think in the time of maybe a couple of years back when crypto was rearing its head very much so, and treasurers were getting asked the question all the time of, well, should we accept crypto for settlement for goods and services that we're providing, was coming up as a regular question. And I think a lot of treasurers saw it as being a very niche activity and not really wanting to get too heavily involved in it, but making sure they had a payment service provider that basically could handle that sort of niche activity for the business without creating too much risk and making sure that you weren't investing in the underlying crypto assets going forward. So I think the industry has evolved from what I would say is the original crypto mantra to starting to become much more involved in the mainstream finance, and that's where we're starting to see digital currencies that are linked to a fiat based, so real money based currencies start to become something that is starting to, I wouldn't say it's becoming mainstream at this point in time, but it is starting to become more widely used in the industry, and therefore I think it's starting to become time now for treasurers to pay attention to it. It is kind of my thoughts around this.
So let's be clear. So I think for crypto, Bitcoin, and so on, I think we would say that carry on using PSPs, this is an entirely different discussion. If you want to invest in crypto, feel free, but that's not what we're here to talk about, and that's not
Correct.
really mainstream.
Yep.
What is mainstream, however, is digital currencies and digital payment systems, and that's where it's really going to come in.
Yep, agreed.
So,
and I think that's now starting to evolve. So we're obviously very familiar with the central bank governed payment systems that we have in place, the card-based systems that we have in place around the world. But what is starting to happen is there are starting to become alternative rails that are being created to facilitate payments in a digital world, in an entirely native digital world, in a more efficient way than we currently do it. Probably the most common way that we all know is that if we're doing e-commerce and we're doing an online transaction, we'll use a credit card, we'll use a card, we'll use a debit card, etc. But that has its limitations, as we know well, Damian, and it has its costs for merchants as well. And the industry is saying, well, if things are becoming truly digitally native, where the end-to-end transaction is entirely digital and may even be handled on a distributed ledger, card is not necessarily the interaction you have to have as an individual with a card system, with a card payment, is not necessarily the way that those payments are going to be able to be settled going forward. And that is why I would say alternative payment systems are developing. They are developing on the back of the traditional rails, but they are enabling settlement in a truly digital way, in an autonomous way, where you don't even need to have a human involved in it. And that can be quite scary for treasurers. And therefore, that's definitely something they need to understand before they before their organizations start to put themselves, into these systems.
I think most of us stopped expecting to deal with a human in a bank a long time ago, but that's the second issue.
True, but at least it's not a customer service chatbot.
To come back to the point of, so credit cards are clearly playing a big role in here. First of all, they're extremely expensive. I mean, we are talking about a toll of between 2 and 3%, generally speaking, which is huge. Secondly, and I'm afraid there is a geopolitical aspect here, most of the credit card companies are US based. And I think the one thing that has to be clear to everybody is that we cannot assume that the US is a friend or an ally going forward. And this is certainly something which is driving the way the ECB is thinking, for example.
Yeah, people are looking for alternatives, absolutely, and not be so dependent on one particular system, absolutely.
So apart from anything else, so there are two very powerful forces pushing this. The first is cost of certainly card-based systems. But that affects people who are in retail. It doesn't affect people who are basically B2B yet. But the second is maybe a question of interdependency in a geopolitical environment, which is now highly unstable.
So absolutely, and I think it's you meant, yes, it is what we know as in the B2C context on e-commerce is what we use all the time, but increasingly it is done in a B2B context as well, in procurement cycles using virtual cards, etc., etc. These are all still card transactions that still have a similar pricing, and actually commercial card transactions are more expensive. So it's become quite a large part of B2B settlement now, probably merging around the 10 to 15% of B2B settlement is going through those sort of what I would call commercial card B2B payment rails as well. And to that point, then it is expensive for merchants, and people are looking for alternatives.
And at some point, the good old host-to-host transaction payment system is going to be replaced, right? Because that works, it's very efficient, but it's also very old technology generally.
But I think, let's not just be hung up on the cost and the geopolitical. I think one of the other key things, that the reason why alternative digital payment systems are evolving is around a couple of things, really. First of all, distributed ledger blockchain technology was a pipe dream 10 years ago, as we all know as treasurers, when we were all talking about it, but nothing ever happened, etc. But it's starting to become a reality in commercial transactions now. And the traditional card and the traditional card high value and low value clearing systems are not very efficient at settling something that might be automatically confirmed on a blockchain and therefore need to derive a settlement where you don't even need to have a human involved in that. And that's where distributed ledger payments technology, which we can call alternative payment systems, are starting to develop to be able to 24/7 allow that settlement regardless of the clearing systems being open or closed. So I think the speed element of it and the interoperability element of it is also a reason why this is evolving. And again, the reason why treasurers should start to pay attention to this.
So in other words, even if you look at B2B, yeah, we're paying electronically, but at some point there's this transition back into fiat currency, whatever that may be. Whereas if it's digital, it will just go straight through.
Correct. Yeah.
So in other words, we're still using systems that were built around paper in the 14th and 15th century.
Yeah.
Which are fantastic systems.
Is that certain things are starting to move completely away from that, even away from paper to digital, to what I would call distributed ledger technology. And I think that's the piece that makes it different. And that means that the existing payment clearing systems are not fast enough, are not autonomous enough, and are not 24/7 to allow a human not involved in the transaction, but machine to machine, basically, to be able to settle. And I think that is the reason why we're seeing digital currency settlements on a blockchain start to become a reality.
Okay, so thanks. So if I can sum up, this is about changing the payment landscape. It's not about Bitcoin.
Absolutely, yeah. It's about what I will say is, and I've been involved in the crypto industry in my time at Clearbank, for example, because we were a settlement agent for it from a long time. It's about taking the best of the way that the crypto players are using the distributed ledger technology into creating real use cases for everyday companies, for everyday treasurers. Yeah.
Just one thing, which is a bit of a detour, but would I be right in thinking that if everybody is using distributed ledger technology, a lot of the KYC, AML type of stuff should go away because it's completely traceable and auditable?
In theory, in the future, absolutely. It becomes much more auditable and it becomes much easier to tag identity information to transactions on the ledger, and everybody can see it, or people who have got permissions can see it. So it should simplify that going forward. I think we're a long way off that yet, but I think that we know the technology can do it.
I'm trying to find a hook for treasurers. If this might make KYC easier, then everybody will be interested. Okay, so thanks, Simon. So this is really about payments. It's not about crypto. But let's move on a little bit to some of the other things that I think are important when you come to implementing. But just before that, I think we should also make it clear, people get confused with tokenization. Tokenization is another huge innovation, but different. So we're not going to go into that now. So when we look at digital payment systems, or and so on, people talk about, so we put crypto to one side. So the two remaining ones are stablecoins and central bank digital currencies.
Yeah.
And I believe you're pretty skeptical about both of them. So let's start off with stablecoin.
Yeah. Let's so central bank digital currencies have been talked about, for the last 5+ years. So we all talked about blockchain 10 years ago, couldn't really find any use cases for it. And rightly so, the central banks could see the opportunity to potentially, create a public digital central bank digital currency that could be used, for settlement for individuals, for B2B, for interbank as well. And most central banks around the world have had working groups. They've been playing around with it and testing, but the reality is that they've really not made that much progress on it, and it's a shame. One of the markets that has made probably the most progress in a consumer or in a broad perspective within their market is China, and the digital yuan, which is the central bank digital currency that was widely used to distribute funds to people during the Olympics, when the Olympics were on in Beijing, etc. So quite a few years ago. But interestingly, hasn't really permutated into the broader economy because people use
Alipay and WeChat.
Alipay and WeChat Pay because they can run their life on it. Yeah. Which is the key thing, because it's become a super app that you can run your whole life on it, around it. And I think other central banks have watched that closely, and the European central bank's been working on it. Bank of England has, US had been looking at it, etc. It is still potentially going to happen, but in my view, central banks are not moving as fast as the digital economy is, and therefore industry is going to have to find alternatives and use alternatives to create what is somewhat similar to a CBDC, but is not backed by the central bank. So I think I, as you and I've talked before, Damian, I'm a big proponent for CBDCs are a really good solution. But the trouble is, I just don't think central banks can move quick enough and can commercialize it in a way that it becomes ubiquitous for us to use easily. I think that's it. That's a key thing.
The ECB keeps threatening to introduce the digital euro within the next 2 years.
Exactly. They keep saying that, and it's a great ambition. And I think potentially the ECB is ahead of where the Bank of England is now, which is has slowed down significantly again. But I think around the central bank moving quick enough, creating an offering that is easy to use, is ubiquitous, I think is a challenge. And you may well find that central bank digital currencies develop to speed up interbank settlements across central bank accounts, which I do think is an interesting use case, a good use case for it. But that would be my mind as to where you would see it developing to. I think
when we last spoke, you also introduced a real technical issue, which is that would mean that the central bank became the counterparty, right?
And I've been involved in these discussions in the industry over the last 10 years or so, and that is a real issue. Again, back to central banks are used to dealing with regulated entities in the market. They're not used to dealing with consumers and individuals who potentially would have a central bank digital currency with them. You're basically talking about taking notes and coins and digitizing it. But in notes and coins, you don't have to do any KYC if you hold a note and a coin, do you? So therefore, the central bank might be printing and issuing it, but they are distributing it through commercial banks to be able to, through ATM machines, etc. The difference with the central bank digital currency is potentially the central bank is the holder of the ledger, and therefore is responsible for the identity of the person that's holding that central bank digital currency. And they're just not geared up to be able to do that and support that, nor would they want to.
It would also ruin the way they handle KYC, which is, we're not going to tell you what you need to do, but we'll punish you if you don't do it.
Which I think would probably become even more like that from a central bank perspective. The other thing that is, it's more of a technical thing, but if you take money out of the banking system, and if you as an individual, you had a deposit with a bank and you move that deposit to a central bank digital currency, you move that money out of the bank and you move it to the central bank, and basically it sits in the reserves of the central bank. That money has gone from the commercial bank, which means the commercial bank can no longer use that money to lend to others. Okay? So I think that's another key thing that is on the minds of central banks, is if they create digital currencies that are going to suck liquidity out of the commercial banking system, that actually creates a bigger problem where lending potentially would start to decline in the commercial bank market. Does that make sense?
Yeah, so just to recap, today, when we do all of our payments through the bank, there's always money sitting in the bank, and that's what the bank uses for its own liquidity. If you take that away, the bank will have a massive liquidity issue.
We'll have less liquidity. I wouldn't say massive liquidity, but we'll have less liquidity.
I said a massive liquidity issue.
Yeah.
So
which
they won't have any
basically will
liquidity.
mean there will be less lending. There will be less lending they can do to SMEs, to consumers, and to businesses. Yeah.
So put all of this together, I think your summary on central bank digital currencies is a nice idea, but it ain't going to happen.
I wouldn't say ain't going to happen. It's going to happen at some point in time, but I think it's going to become an interbank thing, and it's not going to become something that treasurers need to worry too much about.
Or even hope for. Which some might do.
I mean, I think from a risk perspective, we would all, as treasurers, we would all love to have liability directly with the central bank. My time at Clearbank, one of the USPs, the unique points around Clearbank, was it did not lend. Any money that regulated institutions had with Clearbank, they knew were just sitting in the central bank account at the Bank of England. Brilliantly simple business model, very safe, etc. So I know that if from a risk perspective, with my treasurer's hat on, that would be the strongest, the strongest risk position that I would want to have. So it's a nice idea, but I really don't think it's going to be a reality in the next 5 years.
Okay, so let's move on then. So CBDCs for the time being, I think it's a bit of a cross on them. So let's move on to stablecoins, where I think you're not really on the enthusiast bandwagon either at this point, although that's probably maybe more nuanced.
I think this is definitely more nuanced. There is a tremendous amount happening in the market, particularly in the fintech market at the moment, around stablecoins. So first of all, what is a stable coin, and how is it different from a central bank digital currency? The crypto world has used stable coins as a way to get money into and out of crypto for many years, where you take fiat money, you send it to a stable coin issuer, that money becomes exactly the same amount of fiat as a stable coin, with a very, very small fee taken by the stable coin issuer. And then that stable coin can be used to buy crypto or various other blockchain-based assets.
At this point, I know I'm going to state the obvious, but it might be worthwhile just to give the definition of a stable coin and how it works.
Agreed. Agreed. Good point. So a stable coin basically is issued by somebody, and that might not be a bank. In a lot of cases, it's not a bank. Basically, you will send fiat currency, US dollars usually, to a stable coin issuer. If you send 10 US dollars, they will issue with a $10 stable coin that is not backed by the central bank, but is backed by that stable coin issuer. That stable coin issuer will then deposit that money that they've collected in US treasuries and other safe type assets, or you hope they will have invested in those assets. Right? So there are a number of stablecoin issuers. They're all not the same because they're all not investing in the same sort of assets. They didn't used to be regulated. They are now somewhat regulated by the Genius Act in the US, by MiCA in the EU, for example. But the regulation is not the same as bank regulation. I'll just put it into that sort of context.
And if I may, I believe that one of the key things is, or the basic premise is, that the stable coins are backed one for one by safe investments. However, that's not the reality. It's not necessarily.
As I say, you hope that that's where it is, but all types of stable coin issuers are not the same, and are not and are evolving to becoming more regulated. Genius Act is only just coming into the US now. It was launched last year, and it's now coming in at this point in time. Same with MiCA's been around for a couple of 2 or 3 years, and has captured the stablecoin issuers in Europe as well. But 95% of the stablecoins issued in the world are US dollars. So back to some of the things that we were talking about around geopolitics, etc. It's not an alternative to US dollars or the US dollar banking system at this point in time. And most of the issuers of euro-backed stable coins are also US players.
Well, plus also, I believe the US government is anxious to make US dollar stable coins the only, but that's a whole separate issue.
That's a separate topic, but yes. So I just want to make that very clear, that is a reality around this point in time. But if I may,
before the thing is, as you said, you hope that it's backed one for one. The reality is it may not be. Now, also, the other reality is that even with regulation, this works as long as the regulators are very strict and really enforce the rules.
Correct.
I think anybody that's watching what's going on in the financial world right now.
Yeah. And that's why I put into context that these regulations have only just come in, and even the Genius Act in the US doesn't actually start from an enforcement perspective coming in until now, the beginning of this year. So your point about how they put the regulations in place and how they monitor the players is something that's evolving.
Well, and I think we need, at the risk of overstressing the point, we have seen situations, especially in the US, where people who are regulated find a way of persuading the government or the regulators that these regulations do not need to be applied.
Correct. So I think the due diligence on the stablecoin issuer, in exactly the same way as you would do a counterparty opening a bank account as a treasurer, you need to look into those things if you're going to, or your business is going to start to use these stable coins. A lot of those stable coin players are non-bank issuers. They're regulated under MiCA, they're regulated under the Genius Act, in the US. As I say, most of them are US dollars. But in addition to that, regulated banks are issuing their own stable coins as well. And I think that's a lot more interesting potentially for treasurers. Is from a risk perspective, it's the same as having a bank account and having money in a bank account with that commercial bank. It may not be it won't be deposit insured as a stable coin than if it was in a bank account. But for corporate treasurers, the amount that you're getting insured is very low anyway in a bank account. But I think when you talk about stable coins, you've got pure stable coin issuers, people like Circle, people like Tether, but you then also have banks issuing stable coins like JP Morgan Coin, etc., and others. They're in the market. So again, not all stable coins are the same. They're different.
And so two things. The first is I believe that you find that some of these issuers are not necessarily as transparent as one might wish.
Yep.
Not naming any names, but it's not always totally clear. Second, of course, this does kind of lead you back to the time when every commercial bank issued their own currency. And there was a reason why in the end the central bank said no. We're going to take this over, right? There is a reason, because it led to problems.
Yeah.
And the problem being that not every dollar issued by every bank was worth the same.
Yeah, no, that's absolutely right. And you may, as I say, you may see the world of CBDCs and stable coins converging in that way in the future when central banks catch up to what's going on, in digital currency settlement in the rest of the industry, when we see a much more wide stream adoption of stablecoin settlement in the market. That convergence may well start to happen. But the time we're at the moment is people are increasingly playing around with using stable coins, not even playing around, but using stable coins to speed up and automate completely autonomously settlement in certain ecosystems. I think the one that is probably not necessarily many people know it in the industry, but the one that is most broadly used at the moment, as I say, stable coins are very much US dollar based. In the US, repo settlement is entirely automated on stable coins at the moment. So you're not having to wait for Fedwire to open and close, etc. Basically, banks can settle between themselves in the repo market on a stable coin autonomously, 24/7.
And it just goes straight through. So clearly, if I can just come back, because I think you're headed on getting on to the next point, which is where do we go from here? But to summarize on stablecoin, it is gaining traction, but there are issues, i.e., you kind of hope that everything is fully backed, but it isn't necessarily. I believe there's another technical issue that you haven't mentioned, and that is if everybody's issuing different stable coins, then you're going to have maybe technical compatibility issues, right?
Yeah, absolutely. And there are a number of initiatives that are going on in the industry around, if you've got banks issuing multiple stable coins and they want to settle between themselves even more efficiently than they currently do through the high value wire systems, for example, then SWIFT has kicked off an initiative amongst a group of the banks, of the main SWIFT banks. You can see the press releases out there, etc., where SWIFT's going to start to allow settlement on a blockchain-based ledger, which basically will enable settlement between various different counterparties, between, let's say, their stable coins and the clearing system itself, but putting that onto a blockchain to enable it to speed up and give it the ability to be autonomous, where you don't have to have a human involved in pushing the or an API that's sending the payment instruction directly to the clearing system. So it's very early stages. It's an announcement, but the industry is looking at bringing those interoperability challenges together, but it's at very early stages at the moment.
But you're still building another layer, even if that layer is automated.
Yeah, but I think you're kind of changing the existing layer. You're changing the SWIFT connections to Fedwire and chips and the high value clearing systems, and you're putting that on a more efficient infrastructure that potentially can then play with these 24/7 stable coins in a more efficient way.
Which is maybe a technically less pure, but probably more pragmatic approach.
Exactly, it's a pragmatic step approach into it. We'll see how it develops in the industry. There's one thing that I just want to finally say around stablecoins that I think is important. The reason why I do think this will gain traction, and I do think treasurers should start to pay attention to it, is my example of the repo settlement in the US. Now, that's not, that's for bank treasurers to worry about, not for corporate treasurers. But I increasingly, I think you will start to see where smart contracts and trading is moved on to a blockchain distributed ledger system. You will see the business that's moved those transactions onto that type of a ledger expect to have the settlement also automated on that transaction. And we're increasingly seeing it used to happen in a sort of in a sort of similar way in the gaming space, for example. And I think you can see that there are a number of gaming players, as in Sony, for example, that are creating their own stable coin to allow settlement within their games directly on their own stable coin. And I think, therefore, this is starting to come into the mainstream of corporate treasury, and treasurers do need to obviously be heavily involved if those sort of projects start to happen in their organizations. And I think you'll start to see closed loop systems like that start to challenge the existing normal settlement process and potentially move to either their own stable coin or an industry-based stable coin.
And then potentially, as you say, once the big commercial banks start getting more involved, then that will give it a boost.
Correct.
So basically, if I can recap, so far, big changes coming, but don't hold your breath if you're waiting for a central bank digital currency. Stablecoin maybe, but there's still a whole load of issues in there. And especially if you are in Europe, you might want to think about doing everything on a US-based system. So it is a big thing, it's coming, but so where do we go from here, since the two main contenders both have serious issues?
Yeah. I think, my advice would be that, there is an awful lot of investment and growth happening in the stablecoin settlement space. We're not seeing that in the central bank digital currency space, as I've given you some of the examples. Even in China, we're not seeing it growing. So I think Treasury is going to increasingly get pulled into, as their business start to convert things onto a truly distributed ledger-based smart contract system for some of their products and services, let's say, they are going to get pulled into, well, actually, we should start to think about using a stable coin, for this settlement. And I think what's important is for treasurers to be aware of who are the providers, the risks. And I think it is a space that's changing very, very fast. Even between, you and I speaking, I think 2 or 3 weeks ago, Damian, the amount of investment that's happened even again in the last 2 or 3 weeks in this space has even surprised me. With, fintech players spending billions in buying other different players to link to their merchant settlement systems to provide stablecoin settlement rails for a lot of their credit card merchant processing customers, for example. So I don't think this is something that is something to be kicked in the long grass and something that may not happen for the next year or two. If people are making those sort of investments and are making a stablecoin settlement just like a card settlement on their system, for example, then I think this is going to hit treasurers a lot faster than we actually think.
So a quick parenthesis, isn't this also going to hit the banks in the same way as a CBDC would?
The PSPs that are investing in these things and starting to use these stable coins, and the stablecoin providers themselves are all using the banks. All right, so they're still using the banks for settlement. They're still using the banks for safeguarding their money, etc. So the difference is that the money still stays in the commercial banks, so it's still liquidity for them. So I don't think it hits the banks in the same way as a CBDC would do.
Okay, but Certainly, one thing is that the commercial banks do make a lot of money out of the credit card system at the moment.
Correct. It will hit it on that perspective, absolutely.
So,
It will. But interestingly, that's the reason why a lot of the merchant card processors are heavily investing in this, because they don't want to end up with the declining payment type. Yeah. They want to have the growing. And we haven't touched this at this point, but we should have probably mentioned it earlier. The big credit card networks, card processing networks, are equally investing in alternative payment methods, so account-to-account payments, for example, and watching the stablecoin space very, very closely. And don't be surprised if either of the two big card networks start to make acquisitions in this space as well. They've already made lots of acquisitions in the account-to-account space that's not using the card rails. And with everything that's happening with the acquisitions that the merchant processors are doing at the moment in the market, it's only a matter of time before you see the networks get involved in it as well, I'm sure.
okay, so that's a space to watch, especially if you're in the consumer business. But if I can come back, I think what I heard you say, and certainly if I can go back to my own experience as a corporate treasurer, watch procurement and your sales guys, because typically what happens is that you get a phone call saying, we've got this contract and here's what we've got to do. Now it's your problem.
Correct. And I think that's absolutely the point, Damian, that I mentioned around. It's about looking at the innovation in the areas of your business and seeing who is working on smart contracts, for example. Forget thinking about, the settlement method or anything, but who's actually starting to work on some of these things where the existing settlement methods are not going to be sufficient, and where the need's happening. And if you're not aware of that, you will get those surprises, and then you will be having to quickly do due diligence on various different providers, etc. So I absolutely advise to start to see where these things are happening. The other key word that is used is to describe this type of commerce. I'm trying to keep it simple by saying distributed ledger smart contract commerce. But the word that's used widely in the industry now is agentic commerce. So
wow, a new word.
And let me kind of define this, and this is becoming very real. So if you go on to one of the ubiquitous AIs, and one of the main things that people are using it for is shopping at the moment, right? So we all used to use the search engines, and then we're now starting to use the AI interfaces. If you're smart enough, and I'm certainly not that at this point in time, but if you're smart enough, you can actually create an agent using those platforms to not only go and search for what you need to do, but then potentially go and buy that for you based on the rules that you've set up for that agent. So you can create a bot very easily to go out and buy something for you based on what you wanted from a basic search criteria originally. And businesses, as you can see, could start to use that. Procurement agent areas could start to use that quite widely, quite quickly. Trouble is that when you move to an agent to agent, so let's say you're a parts supplier, and you're interacting, your agent is interacting with a parts supplier's other agent. You don't want to then have somebody then key in the card details, or use the virtual card to be able to initiate that settlement. What you actually want is your agent to interact with your stablecoin, for example, to completely automate that settlement. And then as a treasurer, you'll need to make sure that you've funded that stablecoin to have the money available on it. So I think agentic commerce, I thought 6 months ago was a new buzzword, and a new way of doing e-commerce. But I have to say, I'm being quite surprised about, if you look at the press around some of the e-commerce sites, who are tracking the interaction of bots with their sites. We're talking now 10, 15, 20% of their traffic is now being driven by other people's agent bots, which is starting to become quite mainstream to my mind. Yeah.
Yep. So that certainly creates all sorts of challenges. So to summarize, and I'm sure I'm not the only treasurer that's ever met procurement people who will do things first and then talk to Treasury afterwards, maybe. Or salespeople who do the same thing.
The agentic thing is because I think that's really hitting procurement areas right now. And I think it's pretty widespread that people are starting to test and starting to use these things.
So to go back to the question we asked at the beginning, why should treasurers be concerned and why should they take an interest? Well, certainly one area is watch out. You might find that your procurement people or your salespeople are already doing things that are going to take you there.
Yeah, absolutely. Yeah.
And it's best to kind of get ahead of this rather than, oh boy, I've got a problem now.
Yeah. Yeah.
So, okay, so thanks a lot, Simon. It's been fascinating. Great. If I can summarize, change is coming and it might be already in your organization and procurement or sales might have forgotten to tell you. And the ideal solution, and it's really all about payments, how you improve payment efficiency. I think we agreed the ideal solution would be a central bank digital currency, but that's probably not going to happen anytime soon. So you'd end up with all of the variations around stablecoins. However, beware of stablecoins. There are plenty of issues in there.
Yep.
And this is why treasurers absolutely need to keep on top of what's going on.
And this is moving very, very fast. As I say, I've been surprised even in the last 2 or 3 weeks, the amount of investments that are going into this space, and really large sums of money. So I don't think this is going to slow down anytime soon.
Okay, well, may you live in interesting times is, of course, an old Chinese curse.
Exactly. Thank you, Damian.